Alright guys, this is Dwipen Gogoi. Let's do some analysis Nifty for tomorrow. So today Nifty not able to break this higher point and continue toward the downside because there was a strong resistance somewhere there. So why we expecting the price will drop from this level? So let me show you technically. Let me use market trend. This is my trading setup. So here price broke this 200 exponential moving average, but most of the people are expecting that price will continue toward the upside because price broke here. You can see price was rejecting from this level, but finally price broke this area and again continue toward the upside. So here most important thing, if you see previous market behavior, RSI are respecting 70 level, so they are bouncing from 70 level, so somewhere there, and exactly price near 70 level and somewhere there, and given some correction. So we are expecting that price will continue toward the downside. This is technically. Let's do some fundamentally analysis. It will continue toward the upside or it will bounce from this area. Alright, so we will combine both of them, fundamental and technical. So let's see global market. So first here you can see global market, future market, this one global future market, all are negative. Nifty by negative 1%. Let me close this one first, okay. And just a minute. And Bank Nifty negative by 1%, though already negative by 0.3% till now. S&P 500 negative by 6%, Nasdaq 1.29%, Russell almost 1%, even VIX also increasing. It is a probability that price will continue toward the downside. Okay. So if price drops to the downside, what is the supporting line? So we have to find out the supporting line. So in that case, if you now see the previous market behavior, price are bouncing off this moving average. Sorry, this one 20 exponential moving average, and exactly right now somewhere there. So previous market behavior, price pull back near 20 moving average and again bounce. And now they are forming like a bearish candle, and it's a probability to pull back near 20 moving average. So what is the level? So we'll discuss later. So let me first draw a supporting line by connecting this swing point. Let me draw. Okay, so here you can see this one swing point. I'd like to connect this swing point. Let me zoom a little bit. Okay. Now I connect this point. Have you seen price goes up, hit and reverse back, act as a resistance, and I drawn a horizontal line exactly near 20 moving average at the level of 16250 is a strong support. So basically we are looking for buy after giving a correction in this level 16,250. all right, okay. Now let's see the global news. It will continue to the downside or what? So here most important news, Walmart, this one here you can see Walmart dropped by negative 9%. Okay, so that is why US market drop. And another most important news, stock are under pressure on expectation on a Fed remain aggressive raise the federal fund targeting 75 BP basis point. All right, BP means basis point. So if federal increase interest rate, so market will drop. All right, if market drop, so where is the support? So we drawn a supporting line somewhere here first, and then next another, let me draw supporting line by connecting this point. Now we have seen two supporting line. Let me show you in a small time frame like H1. Okay, in a H1 time frame, here I can see we would like to use Fibonacci. So Fibonacci, this point called A point, and at this point called B point. Now where is the C point? We have to find out C point for under our order. Okay, so in that case I'd like to connect this Fibonacci retracement point A and connect point B. So I just connected point B. Okay, just a minute. Okay, I just connected point B. Here I can see A point and B point. Let me drag this one a little bit. Okay, now let me remove. Okay, and the perfect. Okay, here I can see I connect A point, this one, and a B point. So what is the Fibonacci most important level? That is 50 and 61%. All right, 61%. Okay, 50% and 61%. Now where is the 50%? This one 50 and this one 61% retracement. So this is the important zone. It is a probability to pull back somewhere in this zone. Okay, so means if price drop to this level, definitely will go for buy. As an intraday trader, I'm looking for bearish direction. And another important pattern they form, let me remove and let me show you. Okay, now I can see they form a head and shoulder pattern. Price goes up, pull back, goes up, pull back, and it goes up. And this is head, shoulder, and this is also shoulder. Okay, so here is the neckline. So finally we have seen today price broke this neckline. It is a probability to pull back near 16,250. So once price gap down or something open somewhere there, if continue or form any bearish signals, we will go for short for intraday, and our target will be around 16,250. That will be first target. And if they form any bullish signal, so definitely we'll go for buy. It's a probability, or if price break this level, so it's a probability to pull back around 15,900. Okay, that is my trading setup. Okay, so I hope you enjoyed this video. If you like this video, please like and subscribe, and thanks for giving your valuable time.